You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern. It is time once again for TWIFO, This Week in Futures Options, the program where the name says it all. We break down the week that was and indeed still is in the world of futures options. Maybe we'll talk some metals, some ag, some equity, some energy. You never know what's going to make it on the show. That's why you have to tune in every week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Glad to see so many of you have embarked with us on the epic journey that is Options Insider Plus, Options Insider Pro. If you want to learn more about all of that, you know where to go, theoptionsinsider.com. Pick your poison, /plus or /pro. You can also go to /shop. That'll explain more about each of them, put them side by side, let you compare and contrast till your heart's content. Of course, keep those questions and comments coming wherever you listen to the program. We do love to hear from all of you guys and gals out there. And we'll see who we're hearing from on the old program today. I am pleased to be joined over there in the CME hot seat by a newcomer to the program. She is Virginia McGathey from McGathey Commodities Corporation. Virginia, welcome to the TWIFO program.
Mark, well, thank you. Thank you so much for having me.
And Virginia, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the options and future space, as well as what it is you folks do over there at McGathey Commodities Corporation.
Well, of course, things have changed pretty drastically over this last year, but this marks about my 40th year in the business. Way back in 1975, I started as a runner at the options exchange over at the CBOE. And kind of learned a lot about options then. And at that time, there was only call options available. Puts hadn't even started then. So
you predate puts.
Yes, it was an interesting road. But I migrated over to the Board of Trade just because they were opening options as well and were looking for more specialists. As a female, it was a little bit more difficult in the grain market because it was, mainly men over there, but they were welcoming anyone that had some options background. And so that was a little bit of my in to get things rolling. After that, they were, expanding in options, and the wheat was going to be opening in options. And they approached me and asked if I wanted to participate in it, and if I wanted to go to the broker side as opposed to just trade for myself. And it just seemed like a bird in the hand. I thought, what, this might be a great opportunity, and it really was. It was very exciting to open wheat literally just like a year and a half right before the 1988 drought. So everything went crazy after that, and I was able to start my company. I expanded into the bond room. In the middle, like even before this, I had traded options and some futures in bonds and in grains, and of course in equities and indexes. Just trying to find my niche, should I say. And then, they also expanded into Dow options when they opened up. We had a little bit of a group in there, and it just seemed like right as it became a well-oiled machine, the sun started going down on the open outcry system. And it was just, the electronic platforms just got to be a little bit more efficient and effective. But still, options really went a little bit longer because in my estimation, I think that the computer between your ears was still more effective in managing all the strategies and the strikes and what have you when we're doing more sophisticated trading and options. And so that gave us a little bit more time. And so I was able to kind of stay on the trading floor really up until last year. But in the meantime, like in the early 2000s, things were changing, and we're trying to have better marketing. And at that time, the Board of Trade came to me and asked if I would do some market commentary. And I was a little bit hesitant at first, and I wasn't sure what that was all about. And they just said, "Hey, all we have is bald white guys." They go, "We're trying to find some diversity, and we just don't have any right now. But we found you, and we're thinking that maybe you can handle it." And I've actually been doing market commentary really ever since. And now I do it like 3 times a week for the CME. I'm a regular on RFD TV. I've done a number of interviews with other networks from BNN to CNBC and what have you. So, I've come like the full gamut. And then, of course, we just got word 2 days before the close down of the market. And I remember that day very much. March 12th, I believe, is that Friday. And I started taking a lot of pictures, and a lot of traders are going, "What are you doing?" I said, "I just got a feeling about this, that this could be the end of options on the trading floor." And sure enough, a couple of months ago when the CME announced that they've had enough of everything else and was going to only be the Eurodollar options that really were viable for the open outcry, and everything kind of moved then to the electronic platform. And, so I've had a year to kind of think about it. Thank goodness that I teamed up with a few guys that were able to that utilize kind of the same indicators that I do when I'm trading, and we're able to put it in like an algorithm formulas that actually work. And so I feel like I've been revitalized over the last like 3 or 4 months that I've got back involved. So that's kind of exciting for me that I'm staying in the market, and I'm so happy to have gotten the call from Gene to be on your show. I've listened to it a number of times just to kind of get a little bit of an idea of how we need to, how options need to really be more advanced. And your show really does a great job, because I've been around in a number of agriculture events, and I find out that I think that there's a lot of people that are on top of futures, especially in the agriculture sphere, but options, they're a little bit behind on how they can be helpful to managing the risk. And I think, the days of, when you have a default in the crop for weather or whatever reason, should not dictate that you lose your home and all of your property, that there's, tools out there to use to kind of manage to manage all this that can keep everybody afloat, all the way down the line. So this is a great show, and I'm really happy to be a part of it with you.
Well, we're happy to have you on, and there's a lot to unpack there, Virginia. I almost don't know where to begin. You mentioned predating puts there on the floor. I think for a lot of our newer listeners who are new to the markets, I mean, so many people just discovered the world of options in the course of the past year during the pandemic. For all of you newer listeners out there who know naught but buying upside calls in Tesla and AMC, think about that, going back to the days when there weren't even any puts listed out there and you had to do things synthetically, all the fun. And you mentioned kind of being an early woman there in the pits on the CME. I didn't spend a ton of time on the CME floor. I mostly spent my time at the SIBO, but we had operations over there at the CME, in particular, some of the S&P pits over there. So CME always had a reputation as a bit of a rough and tumble crowd. Even then, this was in the late 90s when I kind of got my start down there. So I have to imagine it was an intriguing place, I think, to say the least, Virginia, being a woman down on the floor there in the 80s. I have to imagine you had a bit of a thick skin.
Yes, a bit. I had to battle it out in the pits with some of these guys, and to take my stand. But it all comes down to money and making the market. If you can make the money, make the market and back it up, you get the trade, and the more you have winners, the more people are, they start to back off from trading with you. But I was able to mix it up without a problem.
That is one of the nice things about trading. It doesn't get painted in the light that often, but it's what attracted me to it. It's very much a meritocracy. If you can hang at the end of the day, you can hang, and they'll respect you. If not, you're going to blow out pretty quickly. And so there's something nice to that in the world where everyone's an associate VP of this or assistant of this or whatever. There's no real titles down there. It's just you go down there, you trade, you do what you do, you make what you make, you sink or you swim, and that's kind of about it. Like, again, that's what attracted me to it. It's probably what attracted you back in the day as well. You kind of touched on it as well. I'm just curious. You had the forethought to take pictures of the floor before you left at the beginning of the pandemic madness. You kind of sensed that perhaps things were not going to return in the same condition as you left them. But what are your thoughts now looking back as we are now at this moment that many floor traders dreaded? I know when I walked on the floor of the SIBO in 97, even then were a lot of guys just panicking then because, of course, the ISE, which was the first electronic options exchange, was on the horizon. So people thought the equity option space was going to go the way of the dodo back then. Here we are a few decades or so later, CME finally pulled the plug. It lasted much longer than we thought. But what are your thoughts on pretty much everything but the Eurodollar pits going the way of the dodo, Virginia?
Well, I think that's really, I expected that it was going to go. It actually did last a little bit longer. And what's happened now is maybe, we're kind of like on the precipice of AI, of, artificial intelligence. I wonder if there's going to be another way that could create a market that you can be a little more face to face, but do it electronically. I mean, I don't put that out. I never, you never say never in this business. I've seen so many things when even when I started, we printed our trades on IBM cards. So that was quite a few electronic or a few technology generations, and so things can change. But I this year, just coincidentally, we've had a massive grain market, and it's been entirely electronic. So it's been new to everyone. So now we're starting to see it, and I think that there was a couple of stumbles along the way, but the market has been able to handle it electronically. I mean, you can have your complaints about things, but there's always complaints, whether it's in open outcry or just the way the market is. Sometimes everyone feels that, perhaps the big money is moving the market around until like you get a massive movement from the small money that moves the market around. So, that argument goes out the window. And so that's why we're trying to really get our legs into trading electronically, because the grains specifically, and even the livestock, are kind of boutique markets. But there's an awful lot of opportunity in them when the markets move, as big as they do. And so we're, managing through it. And now we're in the middle of the summer of a major rally in the market, and there's so many things that are involved in this, and the electronic market's been able to manage. So I think that is done and gone. We might as well go. If anybody still has anything on the trading floor, you got to make some calls to go ahead and get get your things from the trading floor because it's not going to reopen for the grains and livestock again.
And we have to make some calls for our next segment because it is time to unleash the movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers. This is indeed the portion of the show where we break down everything that's lighting up the tape over there at CME Group, to the light side, a.k.a. the upside, and to the dark side. Virginia, as our guest, I will give you the pride of place. You get to choose where we begin our journey this week. So where should we start, to the light side or to the dark side?
Well, maybe we should start to the light side, just in the grain market. You know, the wheat, as for just today or the last couple of days, is kind of like leading the rally back. You know, I'm wondering if we're going to be able to, as the heat starts to build up over the next couple of weeks because of the forecast, will we see a big pop in the market and try to take out those highs that we were experiencing like in the spring, late April, early May. I don't know. You know, everyone's kind of concerned about that. But I said, as soon as you give up the goat, that thing can happen. I never say never anymore in this market, just the way things are going. And so we had a huge sell-off last week. And I think even the options, the decline and the contraction of the option volatility was pretty extreme. And I think I haven't quite seen it quite that extreme. And even though the market bottomed out and started to climb back, it didn't really balloon back again. Now it's starting to pick up again, that volatility is, but some of the closing of the open interest, really kind of came in pretty quickly. Now, that's not to say that we can't, ratchet it back up again, but it's kind of difficult. Now, wheat is pretty much leading the way. Corn was really the one. I mean, corn for a while there, that CVOL number that the CME puts out now, that number was over 50%, like steady for a number of weeks, which was like almost a shocker to me. And to try to even trade options with a volatility number like that almost seems impossible. And I would say that would be impossible to be in the pit trading like that, and to be online trading like that is really a challenge.
I just want to dive into the movers and shakers here really quickly. Then I want to get into all that ag fun. You picked a good week to come on with us, Virginia. And you know what? The movers and shakers are actually cooperating. Usually we schedule someone to come on to speak about a complex, and that complex does nothing that week. That's just the luck we have. But these days, pretty much every week, to the upside or to the downside, we see ags moving, and that is the case again this week. We'll start as requested to the light side. It's pretty much all ags all the time here, listeners. Number 5, we have rough rice up 5.25%. It was number 5 in the other direction last week, off about 4 2/3%. Number 4, we got KC wheat up about 6.5%. It was number 3 in the other direction, off 6.5%. So kind of just swinging wildly over the course of the last couple of weeks. Number 3, we have the one lone non-ag breaking into the top 5 there. That's platinum, up about 6.5%, 6.49% to be precise out there. Then number 2, back to the ags, we have wheat up about 7, almost 7.25%. It was number 4 in the other direction, off about 6.15% last week. And number 1 with a pretty sizable bullet this week is oats, up 13.82%. So feeling their oats quite literally out there this week. And now to the dark side we go. Right outside the dark side, number 6, so just barely not making it in. Of course, today's sell-off could maybe, that exacerbates, that could maybe change that. We have the E-mini Russell 2000 off almost exactly 2%, 2.02%. It was at the same spot last week, number 6 as well, off 4.4%. So interesting couple of weeks out there in the equities. Number 5, we have iron ore off 2.09%. Number 4, it's Bitcoin off a comparatively mild 3.97%. It's kind of a rounding error for Bitcoin. Number 3 is the Eurodollars off 10.64%. It was number 1 in the other direction last week, up nearly 13%. Number 2, back to the ags, it's corn. Corn feeling a bit of the negativity this week, bucking the ag trend to the upside, off nearly 11%, 10.97%. It was number 1 in the same direction last week, off 10.11%. So an interesting couple of weeks out there in corn. And then number 1 with a aggressive bullet is lumber, off 27.38%. It's one of the biggest movers we've seen since we started running these reports here. So that's a pretty impressive amount of action out there. So listeners, it's no secret where we have to begin our journey this week, listeners. We're heading out to the world of ags.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, Virginia, as I just mentioned, there's a lot to unpack in the world of ags. Even if you weren't here, I think we'd be talking about ags for most of the show, but there's a lot to unpack. We have oats, we have wheat, we have corn, things moving all over the place, lumber. Where should we begin in the ags this week?
Well, I just want to mention one thing, that even though the oat market is pretty thin as far as options go, the futures really just spiked up over the last 3 days. And, there's always a saying in the grain market ever since I've been in it since 1980s. It's as the oats go, so goes the market. And I'm just wondering if this is a little bit of an indicator that we better start to ramp up. And of course, options would be the only way to do it since we've had this drawdown in volatility. It could be the tell. Also, just a couple days ago, we had the July corn futures shoot up to 750. That's really a record. And it just quietly ran up there. Now, the options are already expired for that future. But it really, it was very noticeable to me that actually happened. And so it makes me wonder if maybe this heat ridge, these 100 plus, temperatures are going to really, that it's not good for man or beast or crop. And at that point, if we get some crop damage, then we could see an explosion in the market. And I think that if we get that explosion in the market, look out, because the options have really contracted so much that they could turn right around and explode back out again. So I think that we could be on the precipice of that. So that could be something that your listeners want to kind of take a look at, because there's a lot of options available all the way up. They've been trading pretty handily. I know that they've been really expensive, but right now they're a little bit more affordable. So it might be something to take a look at.
Yeah, I think we can do that. I wish we could hang our hat in oats first, Virginia, but you're right. It's never really been a big options stalwart. I'm not sure why that is, why the ag action hasn't spilled over from the futures into the options in oats, but I would love to have a day where we could parse a lot of options volume in oats, because like we said, it is moving. It's number one to the light side. Unfortunately, not a lot of options paper going along with that. So I think we'll start in the lone dark side contend, unless you go out to the softs and include lumber in that. But lone dark side for the ags this week, we have corn, as Virginia mentioned, a pretty active week. 452,000 contracts on the tape right now. By the way, listeners, you folks, as always, can play along with the show, cmegroup.com/TWIFO, TWIFO, or /TWIO, TWIO. Both of those should work. Both of those should get you to our reports there. Then get on into that drop down, go to ags, go to the grain section, pull up corn, and you can play along with us right now. You'll see coming into showtime, we're seeing that front future at about a 562.5, up about 33 points, or about 6.25%. Since Monday's show, or since Monday's session, really out there. So strong week. In terms of where the action was this week, which month had the lion's share of the business, it was December. Nearly 40% of that 400+ thousand contracts going up in the DEES contract out there. If you're wondering, Virginia mentioned kind of a bit of an ag volatility sell-off, and that is the case out here in corn as well. We're seeing the at-the-money vol at about a 33.5. That's off almost exactly 2.5 points from this time last week. So the product is moving, but we're also seeing the vol coming in a little bit, which makes it interesting. In terms of the skew out here, let's see what we have lining it up in the DEES contract. Last week, the puts were kind of cheap, 5.2% cheap. This week, they are even cheaper, 10.3% cheap. So no love to the put wing there. The calls last week, 6.1% cheap, bid, 6.1% bid to the at the money. This week, almost 5%, about 4.8%. So the calls coming in a little bit, but still bid. And the puts getting a wee bit cheaper out here. In terms of activity, like I mentioned, that DEES futures at about a 554.75. And out there in DEES and across the board here, the most active contract appears to be the 600 call in December, doing about 16,400 contracts this week. The most active day was yesterday, Wednesday, with about 5,500 contracts, followed by Monday, nearly 5,000, and Tuesday at about 4,900. So a pretty active week for the 600s. Maybe not that surprising because, of course, that isn't one of those even level strikes that folks tend to aggregate around out there in their trading. Beyond that, we have the 650s also doing some paper at about 11,000 contracts. The most active day was yesterday as well, 4,600 of those, followed by about Monday with 4,100, 1,000 on Tuesday, and about almost 1,000 going up today. Again, it's kind of back and forth, both strikes. No market bias really in one way or the other on either of those strikes. Beyond that, let's see, 550s. That's more relevant, pretty much at the money strike. And Dees also trading out there this week, about 10,000 of those going up on the tape. The most active day there was Tuesday with about 4,000 contracts, a good chunk of that opening. The rest of the week kind of scattered. Actually, decent paper today as well, about almost 3,000 going up on the tape as well. So Virginia, a lot to unpack. Corn is kind of one of the big dogs out there in the ag complex. Does any of this options activity come as a surprise to you? And what else is catching your eye out there in the world of corn today, Virginia?
Well, corn is pretty powerful right now, and even for as far as options go, in December, is the big crop month. So I think that the $5 strike actually has the most open interest, up at about 58,000 contracts. I mean, that's an enormous number when you're looking at anything else, but corn is the behemoth. If that starts to get moving, that's going to carry everything along. And I think that's why that we're kind of in a more controlled rally. That's why the volatility has come in. A couple of fun facts, though, about corn. The December $14 calls actually have 450 open interest. I'm like, okay, if we see that, like, all bets are off.
That would be an impressive level. That's a lumber rally at that point.
I know. I was kind of looking at that. I'm going, oh my God, there's still almost, there's 5,700 even in the $10 calls. I always take a look at that to see, like, how far out do people really want to reach? Even in soybeans right now, November soybeans. The fun fact there, $22 soybeans, 800 open interest on the calls. Even in the wheat, in the December wheat, $18 calls, 900 open interest on those calls. Just taking a shot.
Everyone's talking about and obsessed with, your AMCs and all these meme stocks. They're forgetting about the ags here, Virginia. There's a lot of that crazy small delta call paper going up out here as well. So if you like that paper, listeners, you could do worse than pay attention to the ags. Before we roll off this one, we mentioned oats earlier. I just want to pull it up again for our listeners so they could see exactly how little paper is going up. Right now, we have a whopping 216 contracts on the tape this week for oats, listeners. Again, it's moving up nearly 14% just for whatever reason. And Virginia, this always kind of puzzles me because we have products out there. They have a fairly active underlying. You think that would lend itself to a decent amount of options paper, yet for whatever reason, I don't know, maybe the end users aren't enticed by the options. They don't see the need for them. For whatever reason, we don't see that spilling over into the options. Why do you think that is, Virginia? Why do you think we could do a robust amount of paper in the oats futures and the options? They do 200 contracts.
I think that it comes back to it's even more of a boutique contract, and that the amount of players in it are pretty. Not so much secluded, but it's just a smaller game, a smaller participant. Everyone has a little bit of oats on their records, on their books. But in comparison to what they have for corn and beans, and it's just a quieter market, and we just can't seem to run up the interest. We tried a lot when we had at the open outcry. We had a number of traders that actually traded oats that made markets. But as soon as things started to go to the electronic market, it really just almost just fell off the cliff, the interest in that. So I don't know what's going to get it back. I thought that even having a big market like this would bring it back, but it gets a little bit more difficult now. And so I think that everyone's playing in the corn, beans, and wheat program, and oats is kind of down the line, unless we get an influx. Now, right now, we're having a huge rally in the market with the stock market at all-time highs over and over and over again. So there's just an enormous amount of money there. Now, if that stock market started to turn, we would see a tsunami coming over into the grain market, just because traders, money managers, speculators, they want to kind of go where the going is good. But the going is still good over on the equity side. So it's really difficult to kind of peel away some extra money to come back into the commodity market at this time. Maybe next time, but not this time.
We'll see. We have to keep rolling throughout the ag sector. There's a lot to parse here. We mentioned the wheat is number 2 to the upside, so I think we'll hang our hat out there next. Listeners, go out into that drop down. You stay in the grains and oil seeds, go on down to SRW wheat. Maybe we should break that down really quickly as well, Virginia. It's been a while since we talked about that. We get questions every now and then. What really is the difference between the KC wheat and the Chicago wheat, and why does one trade more than the other? So maybe we should start there, Virginia, revisiting that. Why does the Chicago wheat blow the doors off the KC wheat, and what really is the difference?
Well, the difference for the soft red wheat and the hard red wheat, it's just like it's the spring wheat or it's the summer wheat, and one is used more for like feed, and the other is used more to make bread and other goods that you eat on your table. And so that's kind of what, weighs it down. Generally speaking, one has higher protein, the other one has less. And this is what we're feeding, what we're using. A lot of wheat is actually used for feed for the meats. In order to get your steak on the table, we've got the beef and the hogs, that's a whole nother market. And of course, that becomes more of a worldwide market. Now, also, wheat is easier to grow, and you can grow it winter and summer. So you have like a double harvest. And oftentimes we have for the longest time, really, we just have huge stocks of it. And as of late, we're starting to kind of tighten up a little bit. So that's really the difference between the two. We also have like a Minneapolis contract as well. So, we haven't, they're all different as far as their quality and their value on what you can use it for. But because it's used for feed and it's used for different things that you cook with, we keep them completely separate.
There you go, listeners. For everyone who writes in now in the future and asks that question, I will refer them to this episode to get Virginia's in-depth explanation. Let's head out now to the wheat, in particular the SRW wheat, as it is known out here. Doing some decent paper, about 100,000 contracts close to it on the tape as of showtime. That front future at about a 672 right now, up about 57 points, or about 9.25%. So that upside in wheat looking even better if you look at it from just this week's perspective. In terms of where the action was out in September, about 41% of that nearly 100,000 contracts going up in the September contract. Let's hang our hat out there. The vol actually ticking up a little bit out there in wheat, so maybe bucking some of the rest of the ags trend out there, about 32.25. So again, everyone out there who's wringing their hands saying, "Oh, the equity vol is so anemic, it's coming off. Where else can I look for vol?" We've been saying it for a while. You could do worse than check out some of the ags out there, and they are continuing to deliver this week. That's up about 0.75 point from this time last week. In terms of the skew, not a lot changing out there this week. The puts last week, 5.8% cheap. This week, 5.9% cheap. So not a lot of action on the puts. The calls, 9% rich. So they had a little bit of a bid to them. This week, about 7.6% rich. So still a bid to the calls, a little bit less than there was this time last week. And in terms of the action, it seems like it's pretty much all calls all the time this week, which, again, it's up 9.25% since Monday. So kind of hard to fault them. The most active contract are the 730s here in September. So fairly out of the money. Again, kind of going back to what Virginia was just saying about surprising open interest in some of these farther out of the money calls, where we're seeing out of the money calls trading pretty actively here right now in the SRW wheat. 730s doing about 3,600 contracts. All of that pretty much today. A lot of action today out here, followed by the 700s also doing about 3,600 right behind it, with the most active day actually Tuesday. About 1,400 on Tuesday, about 1,100 actually today, and about 1,000 going up on Monday out there. Then the 680s. So you got a nice out-of-the-money call strip going up here this week, listeners. The most active day on the 680s was Tuesday, about 2,000, most of that pretty much opening, and the rest kind of scattered throughout the week, 3,500 total on the week. So pretty active week out here for the September upside call strip. Is that pretty much what you saw out there as well this week in wheat? And anything else catching your eye out there in wheat this week, Virginia?
No, that's pretty much it. That's really how we see it. And I think that we're going to see a little bit more we'll see a little bit more from the wheat complex. And I think that it's because there is some issues out in Russia. They're having some dryness there. And I think that what happens is now, I'm here in Chicago, and when it's, hot and dry on LaSalle Street, sometimes it kind of shakes the market up a little bit. And it looks like that the forecast, the forecast has that over the next couple of weeks. Now, it says that it's supposed to be, a short-term kind of thing. But it's really difficult to sell into the grain market of any kind, especially the wheat when it's on a run, when it is hot and dry outside. And especially if we start to hit some of these 100-plus temperatures, it's very, very difficult to sell into the market. And we might see a little bit more of a lift. And I think that we'll see the rebound of the open interest in the options again, because then once the futures start to, get on the move, let me say, I think that the risk out there is pretty big. And so everyone's looking for other ways to participate in the market with options, whether you're just buying calls or trying to buy some spreads, maybe to do some kind of intermarket spread, or just, like the September versus the December. Those are things to be taking a look at. And I will say this, that about a month ago, we were talking about the fact that wheat and corn were virtually trading at the same price. And I remember having a number of discussions with a few traders and going, we never see that. We should really be jumping on this completely with options. It would have been the perfect thing. We were trading right around $6, both of them at the time. And I said that was the perfect play for intermarket spread with options to buy the wheat and sell the corn, because wheat, historically does trade over the corn. And of course, that was such an easy play. But those are something to kind of take a look at for trading in options, that you don't have to do a future spread, but you can do an option spread the same way. And then it's relatively inexpensive, and you can kind of really manage your risk, and then you have a big upside potential on that. So at that particular time, you would have probably made a little over $1 on that, on every one lot. That would have been a really nice play, but that's something to kind of take a look at even now. Can soybeans, get to $16, $17? Of course, those were the numbers people were talking about in early spring. They expected that, beans in the teens, it was going to go far beyond that. And that's why we're seeing a lot of that open interest up high still there. I think that there's still some possibilities that we may try to test it. I'm not sure if we're going to need, it's a big lift to take it out. But if this starts to get another head of steam, you can watch these options really blow up and the skews go up very high again. So as I said, again, the opportunities are abounding right now because we had that contraction.
Yeah, that's a great spread to keep an eye on. We're always talking about other spreads here on the show, gold to silver, or Brent to WTI. We don't often get into the wheat versus corn spread, but obviously one we probably should start paying attention to more. Speaking of paying attention, any other ags you really want to pay attention to before we roll out of the ags complex there, Virginia?
No, I just think that one thing that we just want to be watching, like beans, the bean options have really kind of exploded with the market, and mainly because the beans were kind of the leader of the pack, because China was buying so much beans and basically bought the crop in Brazil. We knew they're going to come to the U.S., and so the explosion of the option volatility, went well over 30%, where beans is normally around 10%. So it was a little bit crazy, but the volatility, while it has contracted a lot, it's still staying pretty firm. And I think that that's just kind of something to watch. If at any time China comes back in to start buying beans, look out. That's going to be something to watch. Those higher up options are going to be available, and they're going to be. I think that the trade will go far beyond what the open interest was last spring, and I think that we can have a big springboard there, as opposed to even if the futures don't even take out the highs. That we're going to have a lot more participation with options. It's just a better play. You can manage your risk better, and you have still open opportunities for reward there. And that's why options is such a great play right now.
Well, since you asked so nice, I think we could squeeze soybeans in as well. They're not on our movers and shakers this week, listeners, but still doing some paper, about almost 250,000 contracts on the tape coming into showtime. So stay in your grains and oil seeds. Just drop on down to soybeans. There's a lot of different choices there. Soybean meal, soybean oil. We're going to stay in the straight mothership of soybeans out there. Coming into showtime, that front future at about a 14.46 1.25, up about 67 handles or nearly 5%. So a robust run since the start of this week. In terms of where the action is, it is out there in that November contract. That seems to be leading the dance with about just a little over a third, 34.3% of the paper going up out there in November. So we'll hang our hat out there. That no future, by the way, at about a 13.78 and 3/4. What's the vol out here? As Virginia mentioned, the vol has been coming in. That is the case in the front portion of the curve out here in the soybeans, where most of those contracts are coming in a little bit. We get on out to November, the vol is actually staying pretty much where it was, up ever so slightly. It's at about almost a 27. So again, if you're wringing your hands in the equity world saying, I can't find any vol, the ags are certainly exhibiting a little bit more vol out there these days, even though even if they're tending to come in a little bit these days. In terms of skew, let's see, last week in November in these beans, we had a 3.9% discount to the puts. So the puts were a little cheap. This week, much cheaper, 9.5% cheap. So the puts getting crushed out there. And the calls last week, 8.1% rich. This week, about 9% rich, 8.9 to be precise. A little bit more of a bid on the calls. Puts getting crushed as the rally continues out here in soybeans. In terms of where the action was, I said we're at a 13.78 in that no future. It looks like it was the 1,500 calls that were leading the dance this week, nearly 11,000 contracts on the tape. So again, kind of going back to what we were just talking about, Virginia, these pretty far out of the money calls are dominating the action out here in soybeans as well. 1,500 is doing nearly 11,000. The lion's share yesterday, about 5,300, was like slightly biased towards closing. The rest scattered throughout the week. Also had the 1,600 calls, even farther out of the money, also pretty active. The lion's share, that paper actually on Monday, nearly 4,000 going up there. Again, the rest kind of scattered throughout the week. A lot of back and forth on that strike. So 1,500s and 1,600s both dominate the tape out here in November. If you want something a little bit closer to relevance, the 1280 puts doing about 8,000 contracts also in November. Again, the big day was Wednesday, 5,300. So most of the action going up on Wednesday. The rest, again, kind of scattered throughout the week. A good chunk of that action on Wednesday was actually closing out there. So perhaps that's some of the reason why we had those puts getting crushed out there in November. That put wing, it went from nearly 4% cheap to almost 10 out there. So interesting stuff out there. Maybe some closing sales on those puts. They decided not going to happen this week. Either way, a lot of action out there in November. Anything else catching your eye or lighting up your tape out there in the soybeans, Virginia, before we roll on out of ags?
No, I think I think you pretty much covered it. And everyone's just kind of like waiting around to see what's going to happen. Now, we're getting close to right now to tasseling for corn. For soybeans, the real critical stage is not until August. So we still have a lot more time before the crop is completely baked, and then we can start looking at yields. So the movement isn't over yet, but for the time being, we're kind of steady. And I think that's why we've seen volatility come in and a lot of the closing of the options. That doesn't mean that the game is over, though. We're just taking a breather here in the middle of summer. I'm going to ramp it back up as we get closer to the harvest time.
It doesn't mean the show is over either, listeners. We have to take our next pit stop out there in the world of equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, Virginia, you get to take a little bit of a break now, but listeners want to get at you, so don't go too far. They have some listener questions for you. But before we get there, let's get on out to the world of equities. You know, we're talking equities. The flip side of that coin is always volatility, so let's start there first. Coming into showtime, we had a bit of a sell-off going on out there in the broad market, and that continues to be the case. Looks like even though that sell-off is mitigating a little bit, looks like right now. For a while there, both the NASDAQ was over 1%, and we had the small caps getting at a similar level, threatening over 1% there as well. Coming into showtime now, we're actually seeing RVX down slightly from this time last week, which is kind of surprising. You think might get a little bit more of that resilience out there. At about 26.25 when we kicked off the show, down about 1/4 point. So kind of still hovering in that mid-20s range. You know, this narrative of can it break 20 to the downside? Not going to happen this week. Can it continue rallying back up over 30? Not going to happen today, it seems like, either. So we're kind of stuck in the middle there. I'll have to wait till maybe next week's show to have more insight into that. VIX cash coming into showtime at about a 1770. It puts it down about 3/4 point. from where it was this time last week. VVIX at about 123, actually north of the 120 level. So getting frothy out there. It's up about nearly 5 points from last show. And Vol Q, a.k.a. the at-the-money vol of the NASDAQ 100 at about 18 3/4. That's down about a little over half a point from last show. That puts that VIX to RVX spread, so the small cap to large cap vol spread at about nearly 9 points, about 860. That's about half a point wider than where it was this time last week. I guess most of that's coming on the VIX side. VIX has been vacillating a little bit more while RVX stays glued in that mid-20s range. And the VIX to vol Q, so the S&P 500 to the NASDAQ vol spread, is at about exactly a point. It's about a quarter of a point wider than last week. So continuing to widen out a little bit there. Going on out to all things lighting it up in small caps. Remember, listeners, we did just have the big Russell recon going on out there. So a lot of data still coming in. How do you have questions? We talked about it a lot on the show. We had Catherine from FTSE Russell on not too long ago to break down all the action out there. We've got some numbers coming in now. June 25th, that was, of course, the actual date of the reconstitution after the bell. Record 2.37 billion shares, representing almost 81 billion worth of value, were executed on the NASDAQ closing cross in 1.97 seconds. So that's, again, people who wonder, what the impact is on vol. It's a very, very short duration event. Of course, leading into it and coming out of it, that's a different story. But the actual event itself, very, very fleeting. That's done by design. 2.1 billion shares also changing hands on the NYSE. That's the fifth largest closing auction they've ever had. 105.1 billion worth of notional value changing hands there. So a lot of action going on out there. Also, some interesting narratives coming out of this year's recon. Last year, you heard Sean talk about, the big got bigger and the small got smaller. Not so much this year. It seems like everyone got bigger this year. Small, and large. They were breaking it down in some of their analysis. They said they saw all of market capitalizations rising, with the big getting bigger and the small securities also getting bigger. In terms of turnover, it was a 45% larger market event than last year, with trades between 170 and 180 billion on two-sided turnover versus last year at about 120 billion. So recon getting bigger as the names within it continue to get bigger. Let's see what's going on. Actually, pretty decent paper out there on CME as well in the Russell 2000. You want to find it for yourselves, listeners. Go to that same drop down. Go to equity indexes, then head on out to the U.S. Index E-mini and out to the E-mini Russell 2000, where you can hang your hat with us. Decent paper on the tape out there right now. It's like over 20,000 contracts on the tape right now. And looks like most of the action, almost half of that, once again, unlike the ags, which oblige us by trading farther out, September, December, the equities are all about what can you do for me right now. It's all about the weeklies. Most of this paper, almost half of it, going up in the contract that is going the way of the dodo tomorrow. 1 day left on the weeklies. Again, kind of hard for us to really parse that. So let's do what we have been in the past, go a little bit farther out. Let's go a whopping 8 days. That did about almost 20% of the paper out there this week. By the way, the Russell 2000 at a 2170 out there, off 104, almost 105 points, or nearly 5%, 4.6% just this week. So a rough week for the small caps out there this week. And if you're wondering, is it still small delta calls? Well, actually, this week, the most active contract were the 21 half puts going out tomorrow. So again, kind of hard to fault that one at the money puts when this contract's been selling off most of the week. You're probably going to see a lot of put action out. That's pretty much what we saw. But we did see, once again, these were pretty much be smaller delta now because they are pretty far out of the money. The 2340s also trading pretty actively out here this week. So not all puts. There was still some small delta calls out there for, again, everyone who's fixated on the upside in the Russell 2000. Let's look really quickly at the vol. It's about a 25 on this contract, 24.75, up about 5.3 points. So again, a little bit different than what we're seeing in the RVX. But that's a 30-day measure. These are in the weeklies going out in 8 days. In terms of skew, the puts last week, 7.8% rich. This week, 13.5% rich. And the calls last week, 5.7% cheap. This week, nearly 11% cheap. So calls getting hammered, puts getting bid up. Not terribly surprising when we're seeing these things selling off nearly 5% over the course of the week. So is there still action in the small delta calls? The answer is yes, but maybe also given what's going on in the skew, maybe some of that was closing, taking those, getting the heck out of Dodge out there this week. So a lot of action out there in small caps and in volatility. Also a lot of action in your questions. So let's get to it. A little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Time for you folks to make it onto the show. Virginia, good thing you're here because we have some ag-oriented questions that are right up your alley. We'll start off. These are kind of two related questions, so I guess we'll kind of lump them together. First, we have one from Alan. Actually, this one came in, I recall this one now. This came in earlier this week on our pro Q&A session with Dan Gramza, but it was such a perfect question for today's show. I wanted to get your thoughts on it as well. Alan wanted to know, when I'm thinking about adding some ags exposure to my portfolio, which product and vehicle do you recommend, options or futures, and on which underlying product? Also, since I'm starting my ag watching, are there any basic starting points to watch out for that you can share, such as new crop, old crop rotation, etc.? And then we have a similar question here from DTC. They wanted to know, hello, making my way through TWIFO and just wanted to ask if corn is really the best starting point in the ags for newer options traders coming from the equity options market. Now, these questions, Virginia, are kind of representative. We get similar questions a lot from people looking at the ags and are considering making their first foray out there. So when you hear questions like this, Virginia, which product do you tend to recommend? Is it corn? Is it beans? Is it something else? And also, which vehicle? You like to talk about the futures or the options? What's your preferred starting point in the ags?
Well, I think for sure it would be in the options. Clearly, corn would be the one, just because it is so flush with open interest, both in futures and in options. And I think that the market moves a little bit in a more controlled way. Now, wheat on the other side has the least amount of open interest and is not very controlled. So it can move a little bit more wild, especially if you're just getting started. Soybeans has a habit of kind of being shooting up $1 and then down $1 and then just dying for a while. So it gets a little bit too risky in that area. That's why I think corn is the way to go. Clearly, managing when you're new into the market, I think that putting on some kind of an option spread, just buying some naked calls or naked puts, depending on what your way you're kind of leaning in the market, would be the best way to go and to watch it that way. I think it's difficult to manage as a new trader, to manage doing covered calls or having futures against options, because there's you have to have a little more finesse when you're getting out trying to take a profit. Sometimes you can milk a profit into a loss by not working out of it properly, and that's why I say just getting in to watch it. Clearly, buying naked calls or buying an option spread or something like that, I think would be much more advantageous, because that gets you into the market and you're participating in a big market that we're experiencing right now, and you're able to manage your risk.
So if I can read between the lines of what you said there, Virginia, you think they should come in and gobble up those 1,400 calls in corn? That's what you're saying?
Yes. Maybe not that high, but, definitely get something that's a little more affordable. And it's more affordable now because it was a lot more expensive a couple of months ago.
Yes. Good point. Yeah, I think all of that is great. I've said corn many times when we've gotten this question in the past. It's definitely one of the most liquid, certainly more volatile out there these days. So you're not diving into a very thin, illiquid product. The one thing you have to remember, of course, if you're coming from the world of equity options, is skew-wise going to be a little bit different out there. You're used to an environment where the puts are bid and the calls are offered from an implied volatility perspective. Going to be kind of the polar opposite in a lot of the ags. Like I'm looking at corn right now. Obviously, the calls are very bid, and the puts are kind of offered. So as long as you can wrap your head around that, you should be all right. I think everything else Virginia said was spot on. So who was it? Alan there and DTC. Enjoy your forays into corn. Let us know how it goes and how you decide to start. I got more ag questions for you here, Virginia. This one comes from All T $. They want to know, should we continue to expect elevated levels of volatility in the ag markets for the rest of the summer? Well, you kind of mentioned vol has been coming in of late, Virginia. But before that, obviously, we saw kind of a rock'em sock'em period in the ags where they're just moving all over the place. So All T wants to know, should we expect more of that for the rest of the summer?
Well, it's interesting because options are really the implied volatility. Okay. So when so many things are unknown, the implied volatility will go up. Actual volatility sometimes doesn't follow exactly. But I think that we're going to have actual volatility in the market when the temperatures start to heat up and when we get to the critical stages for the crop. Also, there's the wild card that if China comes in and starts buying some of our the rest of our old crop or buying some new crop, all bets are off and the lid is going to pop off on this thing. At that time, I think we might say then a big explosion also in implied volatility. That's why I'm saying that this market isn't definitely over. We have a little bit of a lull here before the storm, but do not fall asleep because there's plenty of action ahead.
Well said. Unfortunately, that music means there's not a lot of action left in the show. We're coming up against it here. But before we go, Virginia, if our listeners are intrigued, and how could they not be with all of your different ag commentary? Maybe they want to reach out to you. Maybe they have questions of their own, like where should they start in ags? Maybe they want to check out some more of your analysis. Where should they go? What should they do?
Well, they can go and sign up at virginiamcgathey.com and it's free to sign up and you can get some information or ask any questions and I get back to you and let you know where I'm at in the market and what I have to say, day by day. I participate in a lot of conference calls with a lot of commodity people. There is the one thing about the trading floor that when it left, it also created a chasm kind of for, just as a hub of information. So now we have to do it by phone and person to person and certainly by your podcast.
Well, we appreciate you joining us today to shed some light on the world of ags. And given how these things are rocking and rolling lately, Virginia, you'll have to imagine you'll be joining us again on the show soon. So I'm looking forward to it, Virginia.
Great. Thanks, Mark. Great to be here with you.
And of course, you know where to go, listeners, for all these reports and a whole bunch more. CMEgroup.com/TWIFO or /TWIO are the places to go to generate your own reports. Then check out all the great research and everything else, education they have going on over there at CME. Speaking of research, I have it on good authority. We will be joined by good old Mr. Eric again. Just breaking down, it's been a while since we had a great visit from the CME research team, breaking down all their analysis. They're going to talk metals, vol, equities, vol, probably some ags. You never know. It's going to make it onto their radar. So look forward to that next week. And of course, you know where to go for all the latest information, the analysis, talking about the recon, the place where we got all those statistics and a whole bunch more. FTSERussell.com, FTSERussell.com is the place to go. Give them a follow on the old Twitter machine while you're at it. At FTSE Russell is the place to go. On behalf of everybody over there in FTSE land and CME land and Virginia and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in so many great questions. Keep it coming. That concludes our broadcast day for today, but don't worry. If you need more in your ear holes, we're back again tomorrow, noon Central, 1 p.m. Eastern for volatility views. And for all of our pro folks out there, we're back again at 2 p.m. Central, 3 p.m. Eastern to break down the mad week of unusual activity on options oddities. So we'll see you back there. Then, of course, back again next week. Kick it all off with the option block on Monday, all the way through to another Thursday, another episode of This Week in Futures Options. We'll see you there.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.